Hey, what's up, my friend? So in today's trading, right, I want to share with you my support and resistance cheat sheet. Why? Simple, right? Because support and resistance, right, is one of the most popular concept in technical analysis, and there's a lot of information out there. And when there's a lot of information out there, you get conflicting information. How do you know what's real and what's not about support and resistance? So that's why I've created this cheat sheet video to share with you the most important concepts about support and resistance. Once you've watched this video, right, you pretty much, right, would have mastered support resistance. You're pretty much ahead, right, of 95% of traders who won't know this stuff. Okay, so to kick things off, right, I will share with you, number one, how to tell when support and resistance will break so you don't get caught on the wrong side of the move. This is powerful stuff because if you know that support is going to break, then you won't be buying. And if you don't buy, you're going to save money. Good. Okay, number two, why not all support resistance areas are created equal, and how do you actually identify the best ones that offers the greatest profit potential? Ka-ching! The third thing, right? How do you actually find losing traders to push the price in your favor so you can actually take profits while they cut their losses? I know that sounds sadistic, right? But it's true. And finally, support and resistance. How do you actually find profitable trading opportunities, right, overlooked by 90% of traders? Okay, so without further ado, let's kick things off. Number one, how to tell when support resistance will break. So this is the key thing, okay? So when you see, right, this is resistance. When you spot a higher, or rather a series of higher lows into resistance, looking like this, right? Series of higher lows, higher lows, higher lows into resistance. This is when you want to avoid selling at resistance. Why is that? And the reason is simple, right? Let me give you an analogy. Let's say in your hands right now, you have this huge sledgehammer, long and huge and strong. And in front of you is a wooden door. You take the sledgehammer and you smash against the door, right? Many times, right? Over the next few minutes. Let me ask you, is the wooden door likely to hold or is it likely to break? Well, common sense would tell you that the door is likely to break. And this concept is the same as what I've just shared with you in trading, right? When you test, right, resistance multiple times within a short period of time, chances are that area of resistance will break. Not 100%, right? There's nothing 100% about trading, but the odds of it, right, that resistance is breaking is higher. Okay, and likewise, right, when you spot a series of lower highs, okay, into support, okay, lower high, lower high, lower high, lower high, lower high, into support, chances are support is going to break because, again, sledgehammer smashing against the door multiple times, chances are it's going to break. So let me share with you a few examples, right, so you can understand where I'm coming from. So over here you see Euro Aussie here and this, right, series of lower highs, lower highs, lower highs, lower highs into support. So do you want to be buying at this area of support or do you want to be selling? Or maybe let's say you don't even want to sell, at least stay on the sidelines, right? You don't want to be buying at this area of support because chances are it will break down. Let's see another one. How about Bitcoin, right? A market that, traders were so fascinated in the 2017-2018 period. Look at this. You see a series of lower highs, lower highs, lower highs, lower highs into support. Over here. Do you want to be buying at this area of support? I hope not, right? Because chances are this area of support will break down because this is signs, right, that sellers are in control. They have managed to push the price lower. Each subsequent push, right, they managed to push it lower, lower, and lower. Another example over here. You can see Bitcoin again. This is the area of resistance, series of higher lows, higher lows, higher lows. Do you want to be selling at this area of resistance? I hope not, right? Because this is, again, right, signs that the buyers are in control. This is where the sledgehammer, right, has smashed the door multiple times, right? You want to avoid selling at this area of resistance. Okay, so hopefully this concept, right, has make you understand where I'm coming from. Number two, right, how do you find the best support resistance areas to trade? Well, the trick is this. The trick is you want to find a strong power move, right, into support resistance. Now, what do I mean by power move, right? So a power move is simply, right, strong momentum into an area, let's say resistance, right? You're gonna see strong big bullish candle coming into resistance. I know this sounds counterintuitive, right? Why do you want to sell, right, when there's such strong bullish momentum at resistance? Why do you want to buy when there's such strong bearish momentum into support, Rayner? I get it, right? And I'll explain to you shortly. And the reason is because when you get a strong power move into an area, the first obstacle is usually far away. And when the first obstacle is usually far away, it means you'll get greater profit potential on your trade. And let me explain. So if you look at this, okay, let's say dollar sing. Okay, I'm just going to, okay, so why is this black line here, Rayner? Oh, very simple. Let me just zoom out the charts, and you can see that this black line is actually this previous highs over here, previous high over here. Okay, so I draw it out. So I want you to pay attention to how the price approach that black line. Pay attention to the price section. Pay attention to this section over here. What do you see? You see strong bullish momentum into that area, correct? And at this point, many traders are thinking, oh man, Rayner, the market is so bullish, it's time to buy. And when they buy, that's disaster. All right, but that's beside the point, right? Why do I want to see a strong power move into resistance? So I'll explain. So when you have a strong power move into resistance, right, I mentioned earlier that your first obstacle level is usually far away. So what do I mean by first obstacle level? So at this point, let's say you short at resistance. Let me ask you, at which point on your chart will buying pressure come in? So let's imagine now you're short this market. Then you look at this chart. Okay, man, Rayner, where might buying pressure come in? Where will the buyers step in? Well, if you ask me, right, the first obstacle that the sellers would face probably would be this area over here, where this previous swing high could act as support around the $1.41 area. Okay, so at this point, you can see that your profit potential is pretty decent, right? Let's say you went short on this candle, your profit potential is from here all the way down to here. That's quite a large distance compared to when you don't have a strong power move into a level. Let's say you have a choppy move, like, a higher lows into resistance, right? You can see that your profit potential will dramatically be reduced. So let's go back to the earlier example of Bitcoin. You can see what I mean. So earlier Bitcoin, okay. So again, you see over here, let's try this one here, okay. Now, this is the area of resistance, okay. And here you see the series of higher lows into resistance. So let's say over here, there is a bearish candle here. Just imagine this is bearish. I'm just going to change this to bearish, okay. Black color bearish. At this point, if you were to be selling, where is your first obstacle, right? Let's say, imagine you sold at this imaginary black candle here. Where is your first obstacle? Well, chances are your first obstacle is possibly at this swing low over here. Or if you connect using trend lines, that first obstacle might even be higher over here. So you can see that there's really not much profit potential, right, because of this choppy price action coming into resistance. So that's why I said, right, when you want to trade support resistance, right, the best areas to trade are those with a strong power move into an area. This is where your profit potential is the greatest. This is where your first obstacle is usually far away. So let me give you another example. Dollar Mexican. Okay, that's what you see over here. Okay, so again, you have a pretty nice power move coming into this swing high. Pretty nice power move. So ask yourself, where is the first obstacle on this chart? Well, if you ask me, probably at this swing low, right? This is where buyers could come in to buy it near this swing low. So from here, all the way down to here, offers you profit potential, right? Which is much better compared to the price action where price forms a higher series of higher lows into resistance. One more example, right? Pound Canadian, same thing here. You see a nice strong power move here into this swing high. Now ask yourself, where on this chart might buying pressure come in? If you ask me, right, I would say the first obstacle, right, could possibly be at this over here, right, where previous resistance could become support. In other words, your profit potential, let's imagine that there is a bearish candle here. Your profit potential could be from here all the way down to here. There is a distance, right, for the market to move, which results in a more favorable risk to reward on your trade. Okay, I hope that makes sense. So this is how you find the best support resistance areas to trade. power move into support resistance. Avoid trading, right, when you get a very choppy stair-stepping move into support resistance, because that's where those levels usually break down. Third thing, right? How to find losing traders to push the price in your favor so you can take profit while they get stopped out, right? So where do you find this group of losing traders? The secret is this. You want to let the price take out the extreme level. So let's say you are wanting to sell at resistance. You want the price to take out the extreme highs of resistance. Why is that? Right? That's because you can profit from threat breakout traders. So again, I'll explain how this works. So you can see over here, okay, at this point, you've seen that this market has took out this highs over here. This is the extreme high of resistance. Okay, not this one, but this one here. And why is this significant? Because let me ask you, right? When you see the price break out of the extreme high, what's your thought process? Well, I'm sure there will be a group of traders who are thinking, oh man, Rayner, the price has broke out of the extreme highs. This is bullish. It's time to buy. And then they buy, right? Especially if the candle closed green. Even better, more people will buy because it's confirmed that the market is about to break out higher. The candle has closed above resistance. So let's buy. Yep, so they buy. Okay? And when you buy the breakout, right, let me ask you, where will you set your stop loss? Okay, so I'm just going to think how a retail trader would think. They would probably put their stop loss, let's say, below this low. Well, that's a pretty common level. Or maybe below the previous candle low. Or some traders might even be more conservative, below this area of support. That's possible. So what's happening right now is that, let's say the market didn't break out and instead it reversed. It does a 180-degree reversal like this candle over here. This means, right, if the price hits lower, it will trigger this cluster of stop loss here, here, and possibly even here from this group of breakout traders. Make sense? So in other words, right, when the breakout traders lose, when the breakout traders have their stop, right, being hit, right, that's where the reversal trader, that's where you, right, the trader who sold at resistance, can profit from this group of traders, the breakout traders. So this is why I mentioned earlier, you want the price to take out the extreme levels, because when it breaks out of the extreme high, when it breaks down of the extreme low, that will entice, right, more traders to trade the breakout. Because let's be honest, whenever you trade breakouts, where do you set your breakout price point? Probably at the extreme highs, right, or at the extreme lows. If the price, breaks above this highs, I'm in the trade. And you always reference the high as the, the extreme highs or at resistance or the extreme lows of support, right? And that's how we are going to take advantage of this group of traders. So let me share with you another example, right? Look at ES, the weekly time frame. So, okay, you can see over here, I'm going to zoom out and I'm going to plot this level here. Now, why this level, right? Again, same concept, right? Because this is the extreme low. Many traders in the S&P 500, they will look at this chart and say, man, this is the extreme low of this market. If the price breaks below this low, I'm going short. That's their thought process. And yes, price indeed break below this level. In fact, it closed below that level. Very bearish, right? If you followed the news during this point of time, right? Market is bearish, right? Look at all the news, the media is in to say the market is collapsing, it's time to sell. Then guess what? Price took out the extreme lows. The next week, it break and reverse, right? Closing back near the highs, right, of the previous week. This is what we call a false break setup. And again, this is bullish, right? Because for traders who are short, right? Imagine traders who are short this lows, right? Let's say you are short this lows. Where will you put your stop loss? I'm guessing probably above this highs. Maybe above this highs. And those really conservative one, possibly even here. But this is much lesser, right? Because stop loss here is too wide. So probably above this highs or this highs. So in other words, as the market rallies, as the market hits this cluster of stop loss here and here, it's going to fuel, right, more buying pressure to push the market in your favor. Because when traders are short and they set their stop loss above this level, their stop loss is actually a buy stop order to get out of their short trade. So if the price hits this stop loss, right, it will create buying pressure from the stop loss that just got hit. Make sense? Okay, so yeah, so this is what I mean by, price taking out the extreme levels. One more example before we move on. So here, again, same thing. Look at this. Where is the extreme level here? Extreme level here is at this point. Okay, price, strong power move, taking out this highs. Then we have a somewhat like a doji looking pattern. I think they call this a gravestone doji. And the next candle, they smash lower below resistance. So again, imagine this. Imagine, right, traders again who bought at this price point. They bought when the price breaks above resistance. They bought when the price closes above resistance. Oh, this is bullish, Rayner. Look at this. Where do you think will they put their stop loss? Again, right, how a retail trader would set their stop loss is probably below this lows, this lows. That's what I'm guessing. And if the market reverses, right, okay, you can imagine, right, that it will hit their cluster of stop loss, right, which will fuel more selling pressure, which is what actually happened. Okay, and on top of it, right, notice that this again is a nice power move. This is a nice power move. Okay, so let's stack another concept here. So imagine, right, if you are short this market, where might buying pressure come in? Well, the first obstacle, if you ask me, would be somewhere here, right, where previous resistance could act as support. So again, nice strong power move, right? This offers you great profit potential. On top of it, the price took out this prior highs and reversed, right, where breakout traders are now trapped. This means their stop loss, right, can further push the price in your favor and hopefully to your this first target over here. Make sense? Okay, so yeah, so that's the third concept that I want to share with you. How to find losing traders, right, to push the price in your favor. And finally, right, how to find support resistance trading opportunities that most traders, overlook. Very simple, right? So what you want to do is this, right? Go up to a higher time frame. So let's say you enter on a daily time frame. Go up to a weekly time frame and look for a build up. Look for a build up like this, or otherwise known as a tight consolidation. Because when the higher time frame is forming a tight consolidation, chances are you are able to find support resistance trading opportunities on the lower time frame. So for example, let's say the weekly, let's call it TC, right? Tight consolidation. You go down to the daily, you should be able to find support resistance trading opportunity. Or how about, let's say the daily is in a tight consolidation. You go down to the 4 hour, you should be able to find support and resistance trading opportunities. So let me give you a few examples before we wrap things up. So again, right, let's say on the daily time frame, over here, daily, okay, over here, this is another one. Okay, this is another tight consolidation you see here on the daily time frame. Of course, right, you're not able to trade the highs and the lows over here because the price action here is too compact. But when you go down to a lower time frame, right, in this case the 4 hour time frame, you will see that this is actually support and resistance that you can trade off. So let me give you an example. Let's go down to the lower time frame. Okay, so this over here is the daily you see earlier. This over here is the 4 hour. Let's change this to New Zealand Canadian. Okay, this one here. Okay, got it. So you can see that over here now, this consolidation you saw on the daily time frame, this is the daily, and this is the 4 hour chart. This is the support and resistance area on the 4 hour chart. So you can see that, yes, on the daily it might be difficult to trade off this consolidation or the build up, but when you go down to the 4 hour time frame, things become much clearer. Now you have visible resistance to trade off, support that you can trade off, right, to buy low and sell high. So this is another technique that you can use, right, to find support and resistance trading opportunities. Okay, so with that said, let's do a quick recap. Number one, avoid buying lower highs into support or higher lows into resistance. Okay, because this is when support and resistance tends to break up. Remember the sledgehammer analogy that I shared with you earlier. If you want to trade reversals, right, look for a power move into support resistance. This, is because the first obstacle is usually further away, which offers you greater profit potential. Third thing, right, let the price take out extreme levels so you can profit from trapped breakout traders. And finally, when you spot a build up on the higher time frame, okay, this would usually lead to trading opportunities on the lower time frame in the form of support resistance. So I shared earlier, right, if you see a build up on the weekly time frame, on a daily time frame, or even an 8 hour time frame, you can find support resistance to trade off. If you find a build up on, let's say, on a daily time frame, you can find opportunities on the 4 hour time frame because the support resistance level will be much more visible. Okay, so with that said, right, if you want to learn more, right, about support resistance, price action trading, then just go down to my website over here, okay, and download this guide, right, the ultimate guide to price action trading, this one here, right, it's free. Just click this orange button and I'll send it to your email address. Okay, so maybe when you see this video, this layout might change because I'm doing a revamp to the website, but again, I'll leave the price action trading guide on the homepage. So with that said, I wish you good luck and good trading. I will talk to you soon.